morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, November 20th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 in Bermuda, and in Mexico City it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. We have some breaking news that's just coming in. It's only being reported by the Insurance Insider. According to the Insurance Insider, the president of Aon Risk Services, Ted Devine, has stepped down from the firm. Devine is supposedly, according to the Insider, the right-hand man of Group President and CEO Greg Case. He will not be directly replaced. The Insider also says that Aon is believed to be currently undergoing an internal restructure. As president of Aon Risk Services and a member of its executive committee, Devine is responsible for the day-to-day operations of Aon's $5+ billion, 26,000 employee risk advice and retail brokerage services. He's apparently going to be going to work on charitable related causes. There seems to be a little bit of not confusion, but something going on. Devine is still listed on the Aon website. His title is still up there. His biography is still up there. Devine joined Aon in May of 2005. Prior to that, he had spent 12 years at McKinsey. McKinsey, of course, also produced Greg Case. It's unknown what's going on, and in fact, whether or not anything is going on. We do know also that in 2008, according to Forbes magazine, Devine's salary and total compensation package was just under $8 million US. So he was a pretty big fish at Aon, and his move signals something, what we just don't know yet. In other news, which shows, I guess, the emphasis of this program, the Prime Minister of Belgium has become the first president of the European Union. So Charlemagne would be sitting up in his casket somewhere in Aachen, actually, and now Europe finally has a president. The King of Belgium is out looking for a new prime minister. Tony Blair was disappointed, apparently. He was in the running, of course. Now to news from our industry. This is also pretty new news. It came in last night. A New York judge has dismissed charges against the last 3 alleged participants in a bid rigging scheme involving employees of Marsh Mac. The state Supreme Court justice in New York dropped charges against William McBurney, Thomas Green, both from Marsh, and former Zurich Financial Services executive Jerry Mandel. The judge dropped the charges at the request of the current New York Attorney General Andrew Cuomo. The charges, of course, were originally brought by a former New York Attorney General, Eliot Spitzer, who resigned in disgrace as governor and is now featured on cable TV talk shows. AIG has indicated that they are going to continue to work very closely with Taiwanese regulators in order to effectuate the sale of Nanshan Life Insurance Company. The statement from the company said AIG continues to work actively and closely with Taiwanese regulators to achieve a successful close of the transaction. AIG, of course, is selling its 97.5% stake in Nanshan Life to a consortium comprising Hong Kong-based Primus Financial Holdings and China Strategic Holdings. Yesterday, we reported that the Taiwanese had held up the sale, if not outrightly denied it, it's unclear which, because of concerns that some of the new buyers might be tied to mainland China. Here's an interesting story. You'll get a smile on this. The Wall Street Journal is reporting this morning that big shareholders at Goldman Sachs have asked Goldman, which is on track to pay out the biggest bonuses in the company's history, to pass more profit on to investors. Although investors are not pushing for a huge cut, according to the story, they believe Goldman, which received $10 billion of U.S. taxpayer help, should better reward them for this year's rebound. Goldman Sachs spokesman Lucas von Prague said that the criticism of bonuses missed the point. Quote, "Our investors have consistently told us that they expect the firm to set compensation at a level which produces attractive returns. They know that compensation at Goldman Sachs is directly linked to the firm's performance and, listen to this, that our compensation ratio has consistently been at or among the lowest in the industry. Well, I don't know about that, but I suppose if you add up all the Goldman employees and divide them by the bonuses, it comes out with a number that Mr. von Sprague is able to tell us. Back to the EU, regulators in the EU have charged U.S. credit ratings agency Standard & Poor's with monopoly abuse, alleging that S&P unfairly demands payment for securities information numbers and databases. S&P, of course, is owned by McGraw-Hill. They're the only issuer of international securities identification numbers for American securities. The European Commission says it believes Standard & Poor's abuses its monopoly position as issuer by requiring payment from European financial groups and data service providers when they use the numbers in the database. The EU said that the numbers are indispensable for a number of operations that financial institutions carry out and cannot be substituted. The EU said other issuers do not charge any fees or only charge for the cost of distributing the numbers, not how frequently they're used. Regulators said that Standard & Poor's did not incur any distribution costs because clients get them directly from Thomson Reuters or Bloomberg. S&P has 8 weeks to reply to the EU charges. They can seek an oral hearing to defend its case before the EU executive takes a final decision. Here's what the final decision can lead to. You can be sure that people at McGraw-Hill are paying attention to this. The final decision can lead to fines of up to 10% of yearly global turnover for each year the company broke the law. That's a lot of money. The EU is also looking at possible monopoly abuse by financial information service Thomson Reuters for preventing customers from applying their own codes to financial market data feeds. There's a story floating around by Insurance Times. It's been picked up by some of the other insurance services, reporting that HSBC Insurance Brokers is believed to be the latest target linked to an acquisition-hungry Marsh Mac. Insurance Times is saying that widespread speculation this week centered on Marsh eyeing the bank-owned broker. Marsh had previously, again, supposedly been linked to Oval, but is now understood to be focusing its attention on fresh targets. One source described the potential deal as the perfect strategic fit for Marsh. Both parties refused to comment. Whether Brian Duperreault at Marsh has any knowledge, interest, inclination, desire, or wish to acquire HSBC is totally unknown. There's a story in the United States today about the state of the homeowners market. More than 14% of American borrowers who borrowed mortgages are in trouble on their mortgages. This is during the third quarter. This is a new record. The new numbers suggest that the foreclosure rate is not likely to peak until next year as American unemployment rates continue to rise. Unemployment, of course, remains a big driver in the delinquencies. According to the Mortgage Bankers Association, people with delinquent loans now are including a growing number of people traditionally considered creditworthy. About 9.6% of borrowers are currently delinquent on their mortgage in the third quarter. Another 4.5% are already in the foreclosure process. So overall, about 14% of mortgage loans, or 7.5 million households, are delinquent or in the foreclosure process during this quarter, and this number is supposedly going to increase. Stock market's taking note of all this. It's down about 59 points. We'll go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity.
Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.